Hey everyone, welcome in to the KE Report, a special daily editorial with Dave Erfle, founder and editor of the Junior Miner Junky. Time for us to address this correction in the precious metals and the precious metal stocks. Dave sent out a special note to his subscribers just yesterday on Wednesday, a midweek note recapping how he is viewing this pullback, some of the levels that he is watching, and also a couple key company updates. We are going to be recapping a lot of those levels that Dave is watching in the metals and some of those ETFs. So, Dave, let's just start off by recapping where the precious metal sector stands. Ever since March, it was higher highs, higher lows, a very strong uptrend, continuing within a pretty strong channel, upward sloping channel. But the stocks, the precious metal stocks, really started to roll over at the very start of Q3 earnings season, all on the back of Newmont's earnings. And now we are in a 3 week correction in the precious metal stocks. Dave, what's your take on this?
Yeah, a lot to go over here. I've been warning for the past several weeks that, hey, look at gold. Look at the RSI. It's over 80 on the monthly. It's closed above its upper monthly Bollinger Band for 7 of the past 8 months. We haven't had a 5 to 10% correction. Basically, the 54% surge in gold since late October of last year had yet to experience as much as a 5% correction heading into the election. And there was that article that I put out. There's three major catalysts coming up during that week. First we had the election result, then we had the Federal Reserve announcement of another rate cut, and then we had China disappointing the market with not issuing more stimulus.
Yeah, it was kind of disappointing across the board, wasn't it, Dave? The rate cut was fine. It was neutral, but the other two were very negative, it seems like.
Yeah, especially the Trump election, right? I mean, it was a decisive victory across the board. The Republicans taking control of the Senate and the House and having the majority in the Supreme Court as well. I mean, that's pretty much gives Trump a free rein. There was no civil unrest around the election. It's going to be a peaceful transfer of power, it looks like. I mean, there's 10 weeks yet until the inauguration, but it looks like it's going to be a peaceful transfer of power. Trump ran as the anti-war candidate. So all that war premium immediately started to be unwound. So you know how the gold market reacts. It takes the stairs up and then the elevator down, especially when it gets so overbought. So this is a healthy correction, but the way it's happened has been scary. I mean, historically, once the gold price becomes so technically extreme overbought, corrections tend to be short and sharp while moving down to stronger support levels. I mean, after gold futures have strong support at that 2,500, 2,520 area, that would be a 10% correction. And overnight last night, gold got closer to 2,550 where there's some support. It's trying to stabilize right now. And another positive note is silver is stabilizing around 30 before the gold price. So that's kind of a positive note as well.
Kind of a positive. Hey, that's what we have to hang on to right now, unfortunately. But that being said, one thing that really got my attention that has me a bit more concerned here is the fact that GDX went from an overbought condition, which is true bull market action, to an oversold position in 3 weeks. Now, again, this could just be a short-term correction, but it's never good to see oversold positions. Sometimes that can mean a true turn in direction. Not that we're saying that now, because I think all we can really say is that the bull market for at least the precious metal stocks is on pause right now.
Oh, absolutely. But the key point here is we had a monthly close above 40 in the GDX and 49 in the GDXJ, which were multi-year resistance levels. But it wasn't supported by strong volume. And also, like you mentioned, Newmont kicked off the earnings season on a sour note, and that affected the entire sector. So you saw the miners start to roll over before the gold price. That's never good. So right now we have both GDX is attempting to bounce right now from its 200-day moving average around 35. GDXJ has yet to get there, but it's bouncing as well right here. But we need to get both those indexes back above those levels before we can feel comfortable that this correction is over.
Yes, we do. And Dave, just comparing GDX to GDXJ to SIL, one thing that I've noticed is that GDX has been the real underperformer in all of them when you consider that GDX has just broken two higher lows. GDXJ has just gotten through one higher low, so that's not as concerning. And SIL is even a little bit stronger where it's just closing in on a recent higher low. So I know that's all a bit technical, but overall, should we be concerned that the larger cap gold stocks, GDX, the larger cap ETF, that's leading the way down? Or is it better that I guess some of the smaller cap ETFs and stocks are not doing quite as poorly?
Well, I believe it's more bullish that both SIL and SILJ have performed better than GDX. I mean, you got to consider the fact that of the three top gold miners, Newmont, Agnico, and Barrick. Agnico, which is, the best run gold miner on the planet, they came in pretty much as expected with their all-in sustaining costs. They met guidance. But both Newmont and Barrick showed considerably higher ASIC, and they're 20% of the GDX. So that explains why the GDX has gone down so much in relation to not only the SIL and the SILJ, but the GDXJ as well.
Well, Dave, let's talk about the key levels to watch then. Let's start with gold and silver. Where are support levels that investors can really target on these charts?
Well, right now, gold is trying to hold support at its 18-week moving average, which has been support for the past year. I mean, once the gold price broke out above 2100, the 18-week moving average wasn't tested until June, July of this year. It was tested several times, and then it went soaring higher again. So that's where gold is trying to bottom here. I don't think it's going to bottom here, but it certainly could. But like I said, a 10% correction would be down to the 2520 to 2500 level. That would be a more reasonable area to figure in a bottom. But I think we're going to have a bounce here real soon because it's getting really oversold. After that bounce, that's going to be the true test of where it may bottom finally. But the rising 200-day moving average, which is around 2410 right now, and it's rising about $4 or $5 a day, it'll be around 2500 toward the end of the year. So we could see, if we don't see a strong bounce here, then that 200-day moving average may be tested before this correction is over.
Okay, and it is something to note that these moving averages are still heading higher, right? It has been such a strong run that we can still confidently call this a correction for now. But again, a lot is going to tell time-wise how these markets react in the next couple weeks and even through the rest of this year into next year. What about GDX and GDXJ then? Key levels for everyone to be watching.
Well, I'd just like to make one more point about the gold price, if I may here. I mean, gold remains on a trend that is solidly to the upside after breaking out of an historic 13-year cup and handle pattern above 2800 in March, above 2100 in March. So a move down to 2500, which was an all-time high just 3 months ago. So this would be a healthy, long overdue pullback of decent size for the gold price.
That's a good point. And look, that is the thing, right? It has been a very strong move. So now it's just a quick correction in a market that has been very strong, heading higher and higher. But Dave, GDX, GDXJ, then what are the key levels to watch?
Well, as far as GDX is concerned, that 35 level, which is a 200-day moving average, it's bouncing from there right now. I would like to see that hold, but there's more support down on the 50-week moving average at 3430, which is where it bottomed in August as well. So that's an area to look for. But like I said, on the upside, it's got to get above 40 before we can get more confidence that this correction is over. And as far as the GDXJ is concerned, I mean, it hasn't even reached its 200-day moving average yet, and that's around 43. So it got about 2 or 3% away from there yesterday, and it's bouncing, of course, with the GDXJ here after being, like you said, going from overbought to oversold in 3 weeks. So it's due for at least a decent bounce here.
It is. And let's remember, man, these last 3 weeks, they have been packed with data, news, political news, all kinds of stuff. And right now, the one thing I keep harping on is that we're kind of in this limbo phase. Everyone's waiting for Trump to take office to see what he can and cannot do. But there's a lot of optimism around, well, who voted for him and what the markets think he's going to be able to do. Only time will tell, but unfortunately, we're not going to get any answers until early on at best next year when he first takes office. So maybe a bit of a limbo that we might be in here for not just precious metals, but also markets broadly. Dave, thank you as always for chatting. Again, Dave Erfle, founder and editor of the Junior Miner Junky.
Thank you, Corey.